Welcome. I'm so glad that you're here. I'm Jennifer Bourn, and today I want to talk to you about understanding your worth, or more specifically, how to calculate a minimum hourly rate for WordPress projects. Whether you use hourly pricing, flat rate pricing, or value-based pricing for your WordPress projects, to calculate the total price for a specific scope of work, you need to know your minimum hourly rate. But where do you start? What do you need to consider when setting your pricing? And how do you even calculate an effective hourly rate? A common approach to figuring out your hourly rate is to divide the salary you want by the number of hours worked each year. So a 40-hour work week times 52 weeks a year equals 2,080 hours. Let's say you want to make a salary of $100,000. You would take $100,000 divided by 2,080 and come out with roughly $50 an hour. Now, the math makes total sense, but the thinking behind it is all wrong. If your goal is to make $100,000 and you only charge $50 an hour, you are going to run into a lot of trouble. Even if you mark it up an extra 20% to cover expenses, making your rate roughly $60 an hour, you'd still run into financial problems. Even if you charge $75 an hour, you would still run into financial problems. This miscalculation is why we see so many online experts claiming to have made six figures, but yet only paying themselves five figures and struggling to make ends meet in secret. Hitting $100,000 in total earned income or gross is a whole lot different than keeping $100,000 in personal income or net income after paying all of your expenses. Let's talk about pricing WordPress services a little more accurately. Pricing your WordPress services isn't just about the money you want to make, it's about the quality of life that you want for yourself and your team. When setting an hourly rate, you need to think about the total annual company earnings, the gross, and the total annual income, the net. You also need to think about company profit. First, look at the overhead expenses. Your rent, telephone, internet, and utilities, office equipment, office supplies and furniture, software and service subscriptions, travel expenses, salary, workers' comp, insurance, benefits, taxes, advertising and marketing costs, business insurance, business license fees, legal and accounting fees, and professional memberships. You need to look at the total number of billable hours. How many hours are worked each week? How many billable hours are expected each week? Remember, not every hour worked is going to be a billable hour. What about vacation time and holidays and sick days? And will there be any business travel? And you need to look at the desired company profit margin. Salary is not profit. It's an expense. Profit is what's left over in the business after the salary has been paid. It's the money available for you to reinvest and grow your business. Let's talk about how to actually calculate that minimum hourly rate step by step. Using the desired income of $100,000 and full-time 40-hour work weeks, let's look at how to calculate an hourly rate that covers your expenses, creates profit, and supports the quality of life that you want. Step one is to calculate your expenses. Add up all of your expenses, including website hosting, software subscriptions, fees, internet, telephone, rent, utilities, office equipment, supplies, professional tools, memberships, certifications, travel expenses, advertising and marketing, legal and accounting, taxes, vehicle mileage, workers' comp, insurance, benefits, business cards, stationery, all of the things that you have a cost for. Let's say your overhead expenses are $20,000. Well, if you want to make a salary of $100,000 and your benefits and insurance are $12,000, the total annual expenses that you have equal $132,000. Now, if you're new to freelancing or agency ownership and you don't know what some of those expenses are going to be yet, maybe you've never paid workers' comp or you don't know how much benefits are going to be, reach out and ask your industry contacts. Ask for some ballpark figures for planning purposes. Now, once you know that your expenses are $132,000, you know what your total expenses are. Step two is to calculate your total cost of doing business. As I mentioned, you also need to calculate the profit margin that you want to see in your business. A common profit margin for client services is 10 to 20%. For this example, let's play it safe with a 10% profit margin. I take $132,000 and I add 10%, making it $145,200. Next, I have to calculate, in step 3, the number of hours worked. I'm pretty sure you're not a robot, which means you aren't going to be billing 40 hours a week for all 52 weeks of the year. You're not only going to need to take breaks, but you have to eat lunch, respond to email, participate in phone calls, you need to attend meetings, and take care of administrative tasks. There's also sick days, vacation days, and holidays. There's typically 10 holidays: New Year's Day, President's Day, Martin Luther King Day, Memorial Day, Independence Day, Labor Day, Veterans Day, Thanksgiving Day, the Friday after Thanksgiving, and Christmas Day. Now let's say you take 2 weeks of vacation, or you have 14 vacation days. You have 8 sick days and 5 business travel days. The total number of holidays, vacation days, sick days, and business travel days in this example equals 37 days, or 296 hours. Now, if you take a 1-hour lunch and you spend only 90 minutes on administrative work, phone calls, email, and meetings each day, that means you're working 5.5 billable hours a day, or 27.5 billable hours each week. So let's do some math. If you're working 27.5 hours per week times 52 weeks a year, that's 1,430 hours. But we've got to subtract those holidays, sick days, business travel days. We have to subtract all those days. So our 1,430 hours, we have to subtract the 256 hours that we're not going to be working, right? So we subtract that, and it ends up being we're actually only doing billable work for 1,134 hours. So instead of working and billing 2,080 hours each year, we're only working and billing 1,134 hours each year. That's a big difference, and you can start to see why the math in that very first example might cause somebody some financial problems. Now, step 4, you need to calculate your hourly rate. Now that you know your total cost of doing business is $145,200, and the total number of billable hours that you're going to work in 1 year is 1,134 hours, you can calculate your minimum hourly rate. We take $145,200 and divide it by 1,134 billable hours. That equates to $128 an hour. That's the minimum hourly rate that you can charge to take home a salary of $100,000. As you can see, the minimum hourly rate needed to achieve an income of $100,000 is almost triple that original calculation of $50 an hour. The problem with the first approach is setting an hourly rate is failing to account for expenses, days not worked, and profits. Other items that you need to consider when setting your hourly rate are figuring out that you don't work in a vacuum, right? You can't isolate yourself from what's happening in your industry locally or globally. You need to do some work, some investigative work to uncover the rates your competitors are charging and what other service providers are charging for similar work with similar clients. This will help ensure that you set an hourly rate that's in alignment with what your potential clients are willing to pay. Now, you can find this information through industry trade organizations, by asking others in your industry, shopping your competitors, asking potential clients or customers or people that you know who've recently completed a project like the ones that you want to offer, or even researching average salary information. The bottom line on pricing is that no one who started a business, whether they're freelancing or running an agency, did so to work for free. They didn't start a business. You didn't start a business to be underpaid or to exist as a slave to your business. You deserve to earn a fair fee for a job well done. And as long as you price your services appropriately, taking expenses, profits, and quality of life into account, you'll be able to do just that. Thanks so much for joining me today. If you like this content, I hope you'll subscribe so you get to see more in the future. Until then, thanks a lot and have a great day.